Hello friends, welcome back to Mindful Finance. I'm Sundar and today we are going to talk about another IPO, a biggest IPO is going to come. Recently got the news that it is going to be out soon, and which is Tata Capital. But here is my question for you. If you could buy shares in the if you could buy shares in the same company that helps finance your car, your home and even your investments, would you? So let's stick around because I'm going to show you exactly how Tata Capital makes money, what the IPO price is and whether it's worth your hard-earned cash. Let's dive in. This is Sundar and you're watching Mindful Finance. So here we are, and today, as I mentioned, I'm going to cover the Tata Capital IPO and its a possible price range. It can be listed out. So I haven't got the recent document yet, but based on the valuation, based on the annual reports, I have tried to find out and rough estimates about its current book value or current PE, and based on that, I tried to arrive some kind of a price band. We'll dive into the deep, and it's again an unbiased one. Let's get into that one. So let's start simple. What does Tata Capital actually do? Imagine you walk into a giant supermarket, but instead of groceries, it's all money products. Like one aisle of our business that need a loan for your factory machines, and Tata Capital is there. Another aisle is for you and me, like car loans, home loans, or even education loan. That's another section of thing. And if you are wealthy and you want to know what to do with your money, so there they are like to mutual funds and to manage your portfolio. So these are the list of things Tata Capital is into, and it's like majorly like they are like one-stop money shop powered by the trust of Tata brand. So that is the notable thing. The next one is just one thing, like okay, Tata Capital, whatever we discuss, it doesn't do it alone, right? What does that mean? So these are the subsidiaries. They have key players like Tata Capital Housing Finance. They give the home loan, and Tata Securities for investments, as I mentioned the previous one. And okay, but how do they make money? Mostly through like a bank finance things. How they earn the revenues through interest on loans, right? And the fees for processing loans, giving financial advice, or selling insurance and mutual funds. Think of like running a restaurant. They don't just sell biryani. They also earn from desserts, sodas, and service charges, right? So similarly, Tata Capital works in that way. So basically, TCL is a diversified lender and a financial partner backed by Tata brand, and it is a pan-India distribution network. Okay, coming to financial, let's speak under the hood about the numbers. Okay, in FY24, Tata Capital lent out almost 1.58 lakh crore. In FY25, that zoomed up to 2.2 lakh crore. That's almost 41% growth. That's a drastic growth. And what about their profit? From 3,655 crore in FY25, about 10% higher than the last year. But that's a simple or that's a small wrinkle in their hood. What is that one? Their bad loss, or the bad loans, or the banking terminology it is called NPAs, non-performing asset. It has grown up from 1.7 to 2.3%. It's not a huge number comparing to this sector, but something to keep an eye on. Okay, coming to a consolidated metrics now, right? If you see, their EPS has grown from 8.57 to 9.32, which is a good sign, right? And again, book value has increased from 66 to 91. Return on equity, there is a change. Okay, so ROE seems to be less. Gross NPA, which I already mentioned, that has grown from 1.71 to 2.33, and the net NPA from 0.38 to 1. So that NPA is something we have to look into. Now here's where things get interesting, right? Tata Capital has been raising a lot of money lately. From March 2025, the right issues at rupees 281 per share. On May 2025, they merged Tata Motors Finance into the business. And July 2025, another right is used at 343 per share. So why they are doing so many moves? It's simple, right? It's like they are trying to build a war chest for lending more and preparing for the big IPO. It's one of the biggest IPO, I could say. Okay, so that is where they are getting into. So including these issuances, Tata Capital, if you see, right, its equity base will expand from approximately 3,746 million shares, which is pre-2025, to roughly 84 million shares up post-merger. Okay. And after the pending rights, it may increase to 4,035 million shares. And again, it's the face value of 10. Okay, so that is checking its equity and the book value now. As I already mentioned, the book value is increased to 91.36, right? And after all the changes, Tata Capital now has about 4.03 billion shares floating. Okay, so that's a very huge number, right? And their book values per share is coming around 91. And like I hope you guys are aware of what is book value. Like book values, like think of a book value as the company's net worth per share. If you sold everything and paid off debts, it's like the floor price beneath which a share is unlikely to fall long term. In a nutshell, if a company goes bankrupt, this is the price, or this is the amount you will get back. So that is the book value. So what might the IPO cost as investors now? So analysts, they use some formula to calculate this thing, like one is based on price to book ratio, and it basically compares the share price to the company's book value. So if you assume if the book value is say like 2.5x, so the share price may look like rupees 228, and if it is 3.5x, then 320. Similarly, if the book value is 4.5x, then 411. So why we are doing it? Just to understand the 2.5x is a base number. Any company start their IPO with a book value of 2.5. If it is less than 1, which is an undervalued stock, 2.5 is just an assumption we are making, okay? Because these kind of banks have this, peers have this kind of book values. So this range is a pretty wide range. So depending on the how market feels, we could see this IPO price anywhere between 228 to 411. So let's see. Okay. The next method is it's called PE ratio, which is the price divided by earnings per share. So using our FY25's estimated earnings of about rupees 9.7 per share, so we can say approximately 228 at a PE range of 23.5, and at the PE range of 33x, which is around 320 rupees, and at the 42 PE, it could be 411. So just to compare, so Bajaj Finance often trades at the PE range of 30x to 35x. So if Tata Capital lists above 41, some might say it is a bit expensive because we are comparing with Bajaj Finance. In a high level, if I see, if the price range is from 228 to 273, it's a good value. So might be we can say undervalued, and from 273 to 320, it is fairly valued, and above 364 is expensive. Okay, that is the thing. So if the IPO comes below 320, it could be interesting for long-term investors, provided the market stays stable as usual, right? So let's do some simple SWOT analysis over here. So every company has pros and cons, right? And here let's explore Tata Capital's SWOT also. If I see the strength part, mostly it is because it's a Tata brand and everyone trusts the brand, and it's a broad loan portfolio, and it has entire India. The coverage is big, so that is its strength. If I say weakness, ROE is lower than some competitors, which I explained, I shown earlier also, because bad loans also is rising. So these are the weakness. And if I see opportunities, and beyond that, like Tata Motors and Housing Finance are getting merged, so that could be some integration risk in the short term. So that is also another weakness, but it's not a big one. But yeah, and opportunities, if we see, our market is a huge market, and another thing is digital expansion. So that is another strength, because it might be start to cover more of semi-urban, and it will also can get into the upper layer NBFC mandate. Like RBI may guide that, it can give that kind of a ratings. Okay. And threat wise, if you see, threat wise it is heavy competition over there for this NBFC, and regulatory changes always, everybody knows that, and macro headwinds, and the main problem is asset quality concern and adverse rate cycle. Everybody knows this one, right? If the repo rate changes, that's another thing, but those are generic for everything, so that's not a big deal. So in a high level, if you see, Tata has a good trust, its ROE is reducing, opportunity wise it has a huge market base, and threat is competition. So this is the higher level of our SWOT analysis over here. Now coming to the next method, Porter's 5 forces. So using this Porter's 5 forces method, let's see. First thing is the rivalry, which is super high. As I mentioned, like competitors are there, more NBFCs, so everyone are fighting to get the customers. Then the supplier power. What is supplier power? Which is to borrow from, they borrow from banks and markets, right? So where they get the fund? So they get from banks and the market. So using that particular thing, its rating is a moderate, and buyer power, it's again a moderate, because the individual borrowers have many options, giving them choice on rates, right? So whoever gives offer, people moves here and there. So that's also moderate. And new entrants, which is low, as I already mentioned, the threat of new entrants, which is a lot of people are focusing on the digital lending platform and scaling and competition and commercial lending, right? All those things are new entrants. So starting a big financing company is also not easy, right? So they are already established company. So if any new entrants has to come to compete with them, it's very low probability. So that wise it is low. And substitutes, again it's a moderate, because people could pick credit cards, fintech apps, or even mutual funds instead of loans, right? So there's a lot of substitutes available for them. So corporates may use capital markets, right? So there are multiple options for the alternative finance, not just this only available in the market, right? So in a high level, if you see rivalry, yes, there are a lot of competitions are there, and supplier power, yes, lot of NBFCs or a lot of places nowadays people are buying loans, and like a buying power, again same thing, like you and me, we can find where we get a cheaper loans. And new entrants, that is the thing, like Tata has a big brand, and even if a new company joins or starts, it will take time to capture the market. And obviously there are multiple substitutes are available for the services which Tata Capital is providing, right? So this is the Porter's 5 score. So Tata Capital's growth game plan has 2 big pieces. First one is more branches. They expand from around like 438 to 723 branches, especially in small towns where big banks are not as active. So when we discussed about HDB also, we discussed the same thing, right? Because these folks are NBFC folks, try to be in a place where high profile banks are not available. High profile in the sense like ICICI, HDFC, right? So those people now doesn't go to the rural areas. So that is the main area these banks will try to cover. So it has a lot of potential, still a lot of place to grow in that area, right? The second one is a digital push, like HDB Bank. Tata also adapted digital from very long time, and the Moneyfi app helps the people to invest online, and they are cross-selling loans to Tata car buyers and other Tata customers. So it's a mix of traditional trust plus modern track. So that is in a high level I can say. Okay. One of the biggest reasons people might invest in Tata Capital is simple: the Tata brand. People trust Tata. It's like buying gold with quality stamp on it, right? And plus Tata Capital follows strict rules under the Tata Code of Conduct. Governance and ethics are very important, which Tata is famous for that one. And especially in finance, where it's all about trust, so that's very important thing which Tata already has in the back. And already mentioned, Tata Motors Finance is merged, and housing finance also, Tata Housing Finance also merged. So it is going to have a very huge stake in this one. And so now they can start giving loans for everything, home loan, auto loan, and they can cross sell thing, right? And this all are mainly to for the IPO readiness. Okay. So final question: should you invest in Tata Capital's IPO? That's a big question, right? So they are really a strong NBFC with Tata brand. I keep on saying that Tata brand. So that is the only thing. It's not only thing. That is a very important thing to consider. And business is diverse and it is growing, but the price matters, right? So if it is coming above 411, it might be expensive. Under 320, it will be like interesting, right? So my advice, if you say, wait for the final IPO price band, read the prospectus, and invest only if the valuation makes sense for you. So that is the important one. And if you find this interesting, if you find this helpful, as usual, if you find this helpful, and just give a like and subscribe if you are not subscribed, and don't forget to leave a thank you note. That will be a great motivation for me to keep me posted in this kind of keep posting this kind of videos. Thank you.